Welcome to your daily news impacting the markets. Capital markets commentator the Kobasee Letter hinted at a global shift away from fiat currencies as cryptocurrencies surged alongside a weakening US dollar. In an X post on Monday, the Kobasee Letter underlined the strong bullish momentum in top cryptocurrencies, such as Bitcoin and Ethereum. While Bitcoin recently surpassed $120,000 for the first time in history, the second largest cryptocurrency was swiftly moving toward reclaiming $4,000 after a gap of over 8 months. The post also noted gold's spike above $3,400 per troy ounce and only 3% away from a record high. The Kobasee Letter then drew attention to the benchmark 10-year U.S. Treasury yield, predicting it had to break past 4.5% in the days to come. Typically, rising bond yields suggest expectations of higher inflation and reduced confidence in the government's ability to manage debt. The 10% plunge in dollars value this year, the worst since 1973, was also noted. Quote, "The deficit spending crisis is much worse than you think," the Kobasee Letter said. "Position accordingly or you will be left behind," end quote. The U.S. economy is facing a potential crisis as national debt, currently exceeding $36.2 trillion, continues to rise, sparking concerns among economists and analysts. Concerns have exacerbated following the passage of the One Big Beautiful Bill Act, which is backed by President Donald Trump. Billionaire investor Ray Dalio projected that the new budget, with annual spending of $7 trillion against $5 trillion in revenue, will balloon the national debt to a staggering $425,000 per American family over the next decade. In other news, Bank of America has raised its price target for Tesla stock as the investment bank is confident in Elon Musk's FSD ambitions. In a new investor note released by the bank on Monday, B of A analysts stated that the EV giant faced more challenges compared to companies like General Motors and Ford. Quote, "Tesla is the most challenged among the three OEMs, giving disappointing deliveries, IRA incentives phasing out, and tariffs," end quote. Analysts said before adding that the tariff exposure isn't, quote-unquote, insignificant. The analyst also said that the company's sales in the fourth quarter could be affected by the lack of IRA or Inflation Reduction Act incentives, which were $7,500 in EV credits. However, the analyst also said that the company's Robotaxi operations in Austin inspire confidence, quote, "on the promise to deliver unsupervised FSD by the end of 2025, end quote, and updated the Tesla price target by $341 from $305, an over 11% increase. The news comes as Piper Sandler analyst Alex Potter also hailed Tesla's Robotaxi operations, as well as the company's plans to expand the service into Phoenix and the San Francisco Bay Area. Tesla's FSD, however, could face increased scrutiny after President Donald Trump's NHTSA nominee, Jonathan Morrison, called for tougher oversight on autonomous driving in the U.S. Elsewhere, Tesla recently announced the company's Model 3 sedan had reached the 3 million worldwide sales milestone, despite the company's U.S. sales dropping 12.6% year-over-year in Q2 2025, according to data. In other news, ARK Invest, led by Cathie Wood, made significant trades on Monday. Notably, the firm increased its stake in Bitcoin Immersion Technologies and Advanced Micro Devices, while reducing holdings in Coinbase Global and Block. ARK Invest made a substantial investment in Bitcoin Immersion through ARK Fintech Innovation ETF, ARK Innovation ETF, and ARK Next Generation Internet ETF. This move comes after Bitcoin's Ethereum holdings surpassed $1 billion recently, following a $250 million private placement. ARK's acquisition of over 4.4 million shares highlights its confidence in Bitcoin's strategic pivot to an Ethereum treasury strategy. The total value of this purchase amounts to approximately $174.9 million based on the latest closing price of $39.57. ARK Invest reduced its position in Coinbase Global on July 21st, selling shares across ARK-F, ARK-K, and ARK-W. ARK's sale of 218,986 shares is valued at approximately $90.6 million based on the latest closing price of $413.63. On the same day, ARK Invest also decreased its stake in Block Inc. within its ARK-F ETF. Block's shares have been on the rise, gaining 15.5% over the last 5 days as the Jack Dorsey-led company prepares to join the S&P 500. ARK's sale of 90,061 shares is valued at approximately $70.3 million based on the $78.08 closing price. ARK Invest showed confidence in the chipmaker by purchasing shares for its ARK F and ARK W ETFs. ARK's acquisition of 32,846 shares is valued at approximately $5.16 million based on the $157 closing price. In other news, the collaborative design software startup Figma is eyeing a valuation of $13.6 billion on its market debut. However, experts predict that its valuation could stretch up to $16 billion, including restricted stock units and options. The firm seeks to raise approximately $1.03 billion through its initial public offering, which could value it at $13.6 billion by selling nearly 37 million shares priced between $25 and $28 each. This announcement comes as the company stated on its website on Monday that the proposed offering consists of 12,472,657 shares of Class A common stock being offered by Figma. On top of that, 24,646,423 shares of Class A common stock will be offered by certain of Figma's existing stockholders. While this approximately comes up to 37 million shares, Bloomberg's equity capital markets reporter Anthony Hughes gave his comments on the evaluation. Quote, "I think it's interesting because once you add in restricted stock units and options, equivalent of options, and they're like, the evaluation will be a bit higher than more like $16 billion or $16.5 billion. According to him, the deal is going to be priced next week on Wednesday, July 30th. The company is known for its collaborative browser-based tools, which are used by major clients such as Microsoft, Alphabet, and Salesforce. As of March 31st, the company had invested approximately $70 million in Bitwise Bitcoin ETF and plans to invest an additional $30 million in Bitcoin, according to its filing. This valuation of approximately $16 billion is a step down from the $20 billion valuation Figma would have achieved in its proposed sale to Adobe, which was abandoned due to regulatory hurdles. Figma's platform is utilized by 95% of the Fortune 500 and 78% of the Forbes Global 2000, demonstrating its extensive use across various sectors. The company has significantly broadened its offerings, introducing features like Dev Mode for developers, FigJam for brainstorming, and innovative AI-driven tools such as Figma Make, which can create working prototypes based on user prompts. Its business model is subscription-based, offering tiered plans for individuals, organizations, and enterprises, with pricing tailored to different user roles and workflows. In other news, Tyler Winklevoss, co-founder of cryptocurrency exchange Gemini, accused banking giant JP Morgan Chase and its CEO Jamie Dimon on Sunday of attempting to stifle fintech and cryptocurrency companies in the US by charging fees for customer data access. In an X post, Winklevoss criticized JP Morgan's recent move to charge fees for accessing their customers' bank-related information via third-party data aggregators such as Plaid and MX. The rule, according to him, could bankrupt the firms that help link bank accounts to cryptocurrency companies such as Gemini and Coinbase. Quote, "This is the kind of egregious regulatory capture that kills innovation, hurts the American consumer, and is bad for America," end quote, he said. Winklevoss also cited Section 1033 of the Consumer Financial Protection Act that requires financial institutions to make account-related data available to consumers and their authorized third parties without charging fees. He said that by enforcing the controversial rule, Dimon and his associates were undermining President Donald Trump's vision to make America a hub of innovation and the quote-unquote crypto capital of the world. Winklevoss's criticism echoed that of other cryptocurrency industry executives. Aryan Sethi, co-CEO of cryptocurrency exchange Kraken, described JP Morgan's plan as a calculated move to assert ownership over consumer data. Moreover, White House cryptocurrency advisor David Sachs called the development concerning, while pro-cryptocurrency Senator Cynthia Lummis reposted Winklevoss's post. Notably, Dimon has been a vocal critic of Bitcoin, but indicated previously that JP Morgan is planning to get more involved with stablecoins, cryptocurrencies pegged to the dollar. And that's been your daily news impacting the markets. Be sure to subscribe and follow Benzinga Daily to stay up to date.